Welcome to Goldstone Finvest. I am Prabhat Majumdar. I will share today's market update. Market will remain shut on Thursday on account of a public holiday. The market witnessed yet another day of lackluster movement on Wednesday. Nifty is still trading below the resistance level of 15,250. On Wednesday, Indian market closed in the green for the third consecutive day in a row on following a positive trend in global market. The S&P BSE index rose by over 250 points while the Nifty closed above 15,100 levels. Nifty formed a bearish hammer-like candle on the daily scale with a long lower shadow which indicates declines were being bought. Let's look at the final tally on the street. The S&P BSE Sensex rose 254 points to 51,279 while Nifty closed with gains of 76 points at 15,174. Detailing the market study, Nifty opened in a positive territory and remained range bound throughout the session, ending the day with 0.50% gains. Technology, metals, pharma, auto, select FMCG and private banks supported the market. The index formed a small bearish candle on the daily charts as the closing was lower than opening levels. Experts expect the consolidation to continue till the Nifty decisively breaks on the upside above the 15,273 mark. Considering narrow trading ranges, experts advise traders to refrain from creating long positions in the index unless Nifty registers a strong bullish candle with a wide intraday trading range. Researchers analyzed that the Nifty opened strong at 15,202 and hit a day's high of 15,218 but remained range bound with a positive bias. The index closed at 15,174, up by almost 76 points. They added that Nifty continued its listless mode of trading as it confined itself to a 118-point trading range. In fact, the last 5 trading sessions are inside narrow trading ranges with indecisive candle formation, and the index appears to be carving out a new trading range between 15,270 to 14,900 levels. The market closed at the level of 15,170 on Wednesday. However, traders were not keen to carry positions due to the bank holiday on Thursday. It can also happen on Fridays as it can be a weekend getaway. Next Monday, we can see a strong trend. Technically, the market closed above the level of 15,150 to 15,250, which could maintain the market's bullish continuation. We may see at least 15,280 or 15,350 levels in the near term. However, if the Nifty or Sensex fails to break the 15,280 levels, it may send the market to consolidation between 15,000 and 15,280. If the index goes below 15,000 or 50,750, the bullish trend will break. Bond yields and the dollar index would once again determine the market trend in the coming days. India VIX fell by almost 7%. Cool down in VIX below 21 to 20 zones is required for bullish grip and smoother move in the market. Looking at the options front, on the options front, maximum put open interest was seen at 14,000 followed by 14,500 strike, while maximum call open interest was at 16,000 followed by 15,500 strike. Call writing was seen at 15,400 then 16,000 strike, while put writing was seen at 15,200 then 15,100 strike. The above options data indicates a wider trading range for the Nifty between 14,800 to 15,500 levels and an immediate range of maybe 15,000 to 15,350 levels. Bank Nifty opened gap up at 36,112 but moved in a consolidative manner throughout the day. The index settled the day with gains of almost 72 points at 35,938 and formed a bearish candle on the daily scale. The index is forming higher highs, higher lows from the last 3 sessions. Banking stocks are lacking the continuation in the momentum, and as a result, the index is facing resistance above 36,000. Now, it has to continue to hold above 35,750 to witness an up move towards 36,250 and 36,500. While on the downside, support is seen at 35,500, then 35,250 levels. Sectorally, up move was seen in metals, IT, healthcare, consumer durables, capital goods, while profit taking was seen in oil and gas, utilities, energy and power stocks. On the broader market front, the S&P BSE Midcap Index was up by 0.7%, while the S&P BSE Small Cap Index was up by nearly 1%. Domestic markets mirrored positive cues from its global peers, tracking gains from the US market as bond yields pulled back, easing concerns about rising inflation. What to expect for Friday? Well, in the next trading session, if the index sustains above 15,218 levels for at least 30 minutes, the strength can get extended towards 15,273 levels. However, unless Nifty closes above 15,273 levels, a trending move in upward direction should not be expected. Alternatively, if Nifty slips below 15,100 in the next session, then intraday weakness shall be expected, which can extend towards 15,000 levels. Based on the aforementioned levels, if a breakout on the upside happens, then the initial target can be a test of lifetime high present around 15,431 levels. Similarly, on the downside, 14,900 seems to be emerging as the critical short-term support, and if the index falls below the same, then it can trigger a short-term downswing with an initial target of 14,600 levels. While it is subject to further price action evolution, it is prudent to wait for a decisive breakout above 15,250 and technical factors to improve before going long in the market. Above 15,150 zones to witness an up move towards 15,300 and 15,431 zones. While on the downside, immediate support exists at 15,100 and then 15,000. There has been a trend of weakening institutional participation in markets, coinciding with a lack of trend in overall indices. Volatility in global bond and commodities markets has induced uncertainty factors that do not appear to be fully reflecting in the equities. Going forward, the IT sector can be expected to be an outperformer in a defensively positioned market environment, and an extension of recent underperformance by mid-caps appears likely. Going into year-end, seasonal tightness of liquidity in money markets would manifest itself in a weaker rupee and some pressure on financial names. As stated by Goldstone experts, traders should trade extremely cautiously with strict stop losses and should follow support and resistance levels on strict basis. The traders are advised to refrain from building a new buying position until further improvement. Follow support and resistance levels along with the trading call as published on our Telegram channel. For regular updates, like, share and subscribe our YouTube and Telegram channel. Also follow us on Twitter and Instagram. Also be a part of our Facebook family. Views by Goldstone Finvest. Let's build fortune together.